Hello, thank you for joining us at our fourth Money Monday webinar. This is a series of 5 financial webinars the Lake Park Public Library will host and are being presented by Money Management International, a nonprofit that provides consumers with free credit counseling and education. Tonight's speaker, Beatriz Mauersberg, will be talking about when your income decreases but the bills don't. Tonight's participants will be learning strategies to help them get through difficult times when your income decreases due to situations such as job loss, divorce, injury, or illness. The final webinar of the series will be on May 17th, Avoiding Scams and Identity Theft. If you miss one, all of these webinars will be available for viewing at the library's YouTube channel, which can be found by searching for Lake Park Public Library. And now I will take it over to Beatriz.
Well, thank you, Judy. Thank you so much, Lake Park Library, for the opportunity to be with all of you here again. So just a little bit about Money Management. Money Management International is a national nonprofit dedicated to changing lives and creating fresh starts for all families and individuals. We offer budget and credit counseling. We are also the largest HUD-approved agency in the country. And just remember, we are here to help as you work to accomplish your goals. We'll be here to help you and encourage you in every step of the way. So please take advantage of all the resources by visiting us on our website, moneymanagement.org. And also you can reach us by phone at 866-515-2227. And we are available 24 hours, 7 days a week. Our budget and credit counseling, it is free of charge. Well, when income decreases but the bills don't, unexpected events can happen at any time and can easily turn into financial disasters. Emergencies like car repairs, illness, property damage, and loss of employment. All of this are very expensive. Sometimes families and individuals turn into additional borrowing to pay for the increased expenses, but all of this borrowing that extra money can make the situation worse. Borrowing costs will stretch a tight budget even further, creating a downward financial spiral. And so it's very important to know what to do, how to prepare yourself when there is a crisis in your finances. So when income decreases, but the bills don't. The very first thing to really understand when we are going through a financial crisis is that we are not alone. There are a lot of resources around where we are. We have relatives, we have coworkers, we have organizations, our church. So we are not alone. So that is the main thing that we have to really understand, is that there's a lot of help and we just need to be proactive to reach out to this help. As I mentioned, some of these organizations may be nonprofit, but some of the organizations may be local government, a state, or city that will be providing some help or have resources of where to get help. So this is what we're going to be covering today: analyzing your available resources and assessing the situation. We are going to be able to help you create a priority-based spending plan. What are your priority payments when we are facing a financial crisis? And how to work with the creditors. Maybe we may not be able to pay all of our obligations, so we need to be proactive in knowing how to really reach out to all the creditors, what to say, what information to take, where to get all the information from the creditors. And then the last thing is recovering strong and creating a plan. Yes, we have to continue to be positive. We need to continue to to be standing up because we are going to get out of the situation and we're going to be recovering strong. So yes, we need to make sure that we have that positive mind with us and with all our families, our family around us. Now, beast mode. Many of you probably have heard of the beast mode. It usually is when people are talking about sports or competitions. But when we are facing a financial crisis, we need to put ourselves into that beast mode as we tackle any finances, any crisis, or any situation. So be on that beast mode. We are going to explore all the options. We are going to be making some hard choices and have important conversations in our household, because all of us, it's not only a one person or maybe the head of household, it's the entire family. The entire family have one goal, and is to get through the current crisis with the least impact to the entire family. Okay, and that includes family finances. So beast mode, continue to have that strength, willing to make changes, staying positive, and winning whatever is in front of us. Family meeting. This is a very important situation that we need to really have with all our family. This is something that needs to be brought up, especially when there is a financial crisis. So as we begin to analyze all the resources, as we begin to analyze the crisis, all of the family members need to be in the same table. All of us, all of them have to be on the same meeting. It is important to communicate to make sure that everyone understands what's going on, that everyone is able to give ideas of changes or maybe adjustments that needs to be made. So everybody needs to be on that meeting. Everybody needs to be in that communication. So many times, some of the participants sometimes said that maybe the children are too small to be involved. But no, it's never too early to start explaining what is going on. Talking to them, not with a lot of high words, but maybe to the point. We're going through a crisis. We may not be able to go to eat pizza like we were going every week. So they can understand what's going on. So we'll never want to frighten or burden our kids. We also don't want to keep important information from them. So family meeting, communication. And sometimes we'll be really amazed of maybe some of the ideas that they may have, or some of the solutions that they can bring into the table. Okay, so very important to have that family meeting, and also get them involved to give solutions, but at the same time keep them updated in all the situation as the situation takes on. All right, so the very first part that we are going to be going through is analyzing resources and assessing the situation. So everyone now is on the same page, and then the lines of communications are open. Remember, we already have met with the family. Everybody knows what's going on. So now we are going to continue that meeting. We're going to continue that communication, and we are analyzing all the resources available, and then assessing the situation. So let's go and look at some ways that we are going to be doing this. The very first step when we talk about analyzing the situation is requesting your credit report. Monitor your credit report. Especially right now when we are facing a crisis, we need to know who our creditors are. What are the balances? What are the minimum payments that we are able to pay? So very important to request your credit report. Under the federal law, the Fair and Accurate Transaction Act, we consumers are eligible to request a free copy of our credit report under annual credit report. Once we request and once we receive the credit report, it's very important to have a creditor list. Every creditor, the balances, the minimum amount, the due dates, interest rates, everything. So we are assessing the situation. So we need to know what are our obligations. So also part of assessing the situation is knowing if we have any savings, if we have any emergency funds. So if you have emergency funds put away, now it is time to use it. Very important to know how much we have. It can also, sometimes it may be hard to dig into the savings, but it could help avoid creating more debt. The emergency savings should be able to cover the necessary obligations. So that savings, that emergency savings should go to the priority expenses. Also at this time, it's good to know if we have any other members in the family when we are communicating, when we are getting the family meeting, if we have any adolescents or any young adults that are working, if they have any money saved, if we can borrow some of that money, making sure that we have a history when we borrow that money. Also at the same time, we also need to look and see if we have any 401ks or any funding on retirement that we may be able to get up. Now, when we're looking at our emergency funds and we're looking at other members maybe saving or maybe some way that they can help with the everyday expenses, it is important to maintain a record of where that money comes, with how much money we borrow, how much money they are helping with, because it is a loan. It is a temporary loan that we need to promise that we're going to pay that back. So looking at all the emergency funds, all the money that we may be able to gather. Also at the same time, if we have lent money to a relative, this is the time to start gathering that money back. Resources. Under the resources, we're going to look for unemployment. If we are eligible for unemployment, then reaching out to the Department of Labor to see if we are eligible for unemployment benefits. So right now, we are just looking at the entire resources, we're analyzing all the resources. Another great website is the Career One Stop, and this is under the Department of Labor. This is a great website that has more information about unemployment benefits and is also a tool to help you identify eligibility and file for unemployment insurance benefits. And it's all listed by state, so you're able to reach the specific state and know all the benefits for that state. Temporary adjustments. So if your household regularly has more than one income and only one person pays has been affected in this crisis, there are a couple of ways to temporarily increase the take-home pay of those still receiving paychecks in your household. And so one of these temporary adjustments is by reviewing your withholding selections and temporarily adjust them, especially if you have been receiving income tax refunds, okay? So you're able to do these changes by contacting the HR department or your payroll department. Now, make sure that we keep a journal or we keep some notes about all these changes. So we are able to, once the situation gets back to normal or is getting back, then we are able to make the changes back. The same thing is for temporary adjustments, is also lowering the contribution. If you're contributing at this time to a retirement account at work, or maybe 401k or 403b or any of those retirement accounts, by using payroll deductions to put money into a saving account, maybe temporarily just lowering that amount. We're not saying about taking it for good or maybe just zero it out for good. No, just temporarily reduce the amount. And that way we're able to bring more net income into our household, okay? So it's just temporary adjustment. That's all we're trying to make you think about that. And then if you can think about any other adjustments that you can come out with as you have that family meeting, it will be good to hear other options that maybe other relative or other family members may have. Other help, okay? There are a lot of resources available, okay, in the community. When there is a financial crisis, we need to be proactive and reach out to them. Many school districts provide provide resources. They provide free meals. They have a lot of the school districts have food pantries. They also have co-ops, cooperative ministries that provide financial aid. They provide food pantry. Churches, reach out to our church, to our congregation, and see what resources they may have. United Way is a great organization, unitedway.org. And we're able to see in their website, depending of the state or the area where we are located, and then they're able to provide with resources depending of the zip code or the city or the county where we live. So contacting those agencies, depending if we of the resource that we are trying to get from them. 211, this is a national number just to get more help from the United Way. Okay, so creating a priority-based spending plan and setting priorities. So this is a second step that we need to look into it. Okay, so the first step was analyzing all our resources, and knowing, assessing our situation. Do we have one person still bringing income? Was it I'm still bringing income, but maybe it's less income because my income was reduced. So it's just, assessing the entire situation. And in there also, we're looking at all our creditors. We're looking at all our expenses. Okay, so in here now, on the next step is creating a priority-based spending plan. Okay, so once we have taken stock of all the resources available, this is the next step. The next step is to evaluate the budget and create a priority-based spending plan. Now, this may sound a little bit easy, but it can be hard to do because we get accustomed to living a certain way, and sometimes the line between a want and a need can get blurred. So it is time to get into that expense reduction beast. Remember, we talk about the beast action, the mode that we're going to get to it. We're going to get strong. So now we need to get into that expense reduction beast mode. This might not be fun, but it is necessary, and it will help to have you and your family to have you all in the same page as we as all of you go through the budget, to go through the expenses, to be able to survive a financial crisis. Okay, so we are looking at all the expenses. So start taking a hard look at all your expenses. And here you need to look at your budget, look at your fixed expenses, which are the expenses that they are the same amount each month. Then you're going to look at all your flexible expenses, which are the monthly expenses, but they vary from month to month. And then last are your periodic expenses. And periodic expenses are the ones who are yearly, twice a year, 3, 4, 6 times a year. So all the expenses. So remember, family meeting, everybody is looking at all the expenses. And then once we are listing all the expenses, and here is where we have to have a really delicate communication with everyone, a very serious and delicate communication with all of the members in the family, because in here we're going to start tackling all the expenses by looking at which ones are wants and which ones are needs. Once again, cutting and adjusting some of those expenses, it may be hard, but it's necessary, okay? It's necessary. Looking at some ways how the family can also cut expenses by looking at maybe gym memberships, entertainment, like if the family is used to go out to eat, how can we reduce that expense? If we are used to get movies, or maybe by looking at our services for movies or cables, looking at all the ways that the family is able to adjust some of the expenses, to reduce some of the expenses. Now, one of the things that we like to really bring up is that we're not trying to get you to cut all your expenses for good. What we are trying to advise in here is temporarily, we're going to adjust those expenses. Now, at the same time, we want you and your rest of the family, with all the members of your family, is try to find alternatives. So if we're used to go out, the entire family every week, and we go out to dinner, and we go, bowling, or we go to a movie or whatever, then what can we do as a family is still get together, still have fun, but not to spend as much as we were spending before. Maybe doing a picnic at a park, maybe playing in a field, or maybe going to the mountains, hiking, things like that. So it's not just cutting all the nice things that you do with the family, but trying to find alternative. Still having fun, but at a less cost. Okay, maybe family game nights, movie nights, maybe cooking or having like maybe a cooking show in the house, or getting the family to come out with recipes and things like that. So that's what we are trying to when we talk about making adjustments, making reductions, and involving the entire family. Okay, remember it is a crisis, a financial crisis, so we need to continue to be positive, and we need to continue to have that conversation and to have that open with the entire family. And here in the insurance, also that this is one category that we advise if you may be able to cut or maybe reduce. Once again, temporarily. Remember that insurance protects us and mitigates risk in disaster. So we don't want to let our policies lapse, okay? But perhaps we can temporarily increase the deductible. This will allow us to reduce the premium by temporarily increasing the deductible. So if you have rentals insurance, or if you have homeowners insurance, or if you have a car insurance, as long as it is feasible for you, for your unique situation and the situation of your family. Okay, so insurance may be one to look at. Now, the next step will be priority payments and working with your creditors. Okay, so I'm going to review. So we assess the situation, we're analyzing all the resources, and we are creating a priority spending plan. Okay, so we are trying to just concentrate in the priorities: the housing, the food, the utilities, the medication, the transportation, the gasoline, and then just try to concentrate on those priorities. Once we see all of that, and we have our creditor list, then we need to know which of those creditors are going to be receiving payments based on my budget, based on that priority spending plan. So if we cannot meet all of our obligations, so this step is going to allow us to work with the creditors. Okay, so that's why it's so important to go step by step. So we mentioned just a few minutes ago about resources, but assessing our situation, but working with creditors and financial institutions could be the key to help us to manage the finances. A lot of the creditors want to work with the consumers. A lot of the financial institutions want to work with the consumers, because remember, they want those payments. They want that interest. They want, to keep their customers. But it's important to know and analyze all our expenses. And if we are not able to meet all of the obligations, then we need to be proactive and reach out to the creditor. Now, you have already established a priority spending plan, okay? So you got to understand that information, it is on the yellow sticky note on the screen: mortgage, insurance, utilities, car payments. Those are priority. And then from there, bank loans that they are secure, student loans. And then on the bottom, will be your credit cards, unsecured debt. Okay. Now, that doesn't mean that we are going to forget about them. Okay. Once we talk to the creditors. No, we need to make sure that we need to make sure that we pay all of our obligations, but we need to let them know that at this moment we're not able, or maybe we may be able to pay just half of it or 1/3. So whatever solution we come out with, we need to make sure that we follow, that we really go by whatever the agreement that we reach out to. When you contact each creditor, you need to be to the point. You need to explain the situation. You can ask for a hardship program. You can ask for forbearance or a deferment or reduced payment. A forbearance is a repayment plan, okay? A deferment is just to really do a standby and then do the payments later on for a certain amount of time. Or by looking at our budget, we may be able to pay the monthly payment, but maybe a less payment than we were used to, okay? It is also very important to ask them when we are talking about solutions or repayment plans, how the account will be affected in your credit report. So it's very important to understand that. As you talk to them, very important to take notes. Very important to write down the date and the time of your call, the number that you called, the name of the representative that you spoke to, what was the solution offered, what was the plan that ultimately was agreed upon, and you need to continue to monitor your statements to ensure that you are receiving the help, the assistance that that was agreed to. If you can't follow up in writing or follow up via email or follow up by the phone, but it's better just to follow up in writing or maybe email. Why? Because it's very important to have something in writing, something that is confirming the solution, the repayment plan, that it was agreed between you and the creditor or the financial institution. So very important. Okay, so know your rights. Know your rights. There is a law that protects consumers when it comes to collection accounts that have gone in collections. And this is the Fair Debt Collection Practices Act. So know your rights. For more information on this law and regulation, please reach out to the Federal Trade Commission, ftc.gov. So if you do get behind on bills, or if you were already behind before the crisis began, and you happen to receive a phone call from a debt collector, they must follow the law. They must follow the law and regulation. Keep in mind that these privately owned companies cannot call between 8 a.m. and 9 p.m. They cannot call you at work if your employer disapproves. They should not harass you or threaten you. They cannot contact any family member about the debt or what they're calling for. Only just asking for yourself. That's all they can ask. Okay. But for more information on the Fair Debt Collection Practices Act, please reach out to the Federal Trade Commission, ftc.gov. Okay, So this is our last step, recovering strong and creating a plan, okay? So it may take some time, but things are gonna get back to normal. Remember, you're in that beast mode. You are putting yourself in that beast mode. You are having that communication. You're having that family meeting. Everybody is helping each other. Everybody is aware of the situation. Everybody is making adjustments, looking for a way to save money. So everyone should be creating a plan to recover strong, okay? Um, so once the paychecks start coming up, but until that happens, you may still need to work on repaying loans. You need to bringing accounts current. It is also very important to continue to check your credit report. Very important. And here, just want to give you a little parenthesis in here. According to the Fair Credit Transaction Act and Accurate Transaction Act, we are eligible to request a free copy of our credit report from each of the 3 credit reporting agencies, Equifax, TransUnion, and Experian, once a week until April of 2022. Why is this is done by the loan regulation? Is because it's allowing consumers to be able to check the credit report to make sure that the creditors are reporting the way that they told us that we're going to report, especially if we have already made some type of repayment plan, maybe change the due date. So we want to make sure that they are really following their word. And it is the law for us. It's our right to check and to dispute if there is any error. Remember when I mentioned very important to have communication agreements in writing, because that's going to give us our solution to make any disputes into our credit report. So continue to request your credit report to make sure everything is up to date and correct. Okay, so recovering is strong, creating a plan. So part of that plan is to repay as quickly as possible. So once the regular paychecks resume, continue to have that priority spending plan, continue to follow that priority spending plan, and try to pay off the loans, try to bring up your accounts up to date as soon as you can. Pay obligations first and consider maintaining, once again, continue maintaining that priority-based spending plan that you have created in the very beginning. So in that way, we're able to tackle and bringing up our accounts up to date. Emergency savings, okay? I know this probably is the last thing that you might want to think about now, is putting money away for emergency savings. But it is hard to think about future emergencies when you are in a stressful situation, when we are facing a financial crisis. So it is hard. It is really hard to think about future emergencies. However, once the current crisis is over, revisit the budget as family. Everyone, again, in that family meeting, everybody needs to revisit that budget. Everybody needs to give contributions to that budget, ideas, changes, adjustments. So everyone in the family needs to be involved when revisiting that budget. it's very important to commit to a pay yourself first, okay? And this is a strategy of savings by paying yourself first. It could be through a payroll deductions, or it could be just by telling your bank to automatically, once your paycheck hits, to put an amount into a saving account. And then think about having a separate account, a checking and a savings account separate, and that way you're not tempting to get into your money into your checking account. Set a goal to save $1,000, you know, in certain period, in a month or 2 months or 6 months. Remember, revisiting the budget, looking at the budget, looking at ways where you're able to reduce expenses, and also looking at ways where you can get some extra income coming in. Once again, family meeting. Everyone is able to give ideas and to contribute to the entire household. One thing that I like to tell my participants is that managing a household is like managing a business. There's no difference between a business owner and us who manage a household. A business owner has goals. A business owner, at the end of the day, sits down, look at their accounting or their sales or the expenses, who came to work, who's coming to work, what merchandise needs to be replenished, what it was sold, what it didn't sell, what bills are coming up, etc. And probably they do that every day. And at the end of the month, they're able to see, you know, balance the whole worksheet to make sure if the business is earning money, or if it's not, if the sales are a little bit slow, what adjustments, what changes need to be made. Because the last thing that a business owner wants to do is lose that business. Well, as I mentioned just a few minutes ago, managing a household is just like that. It is like managing a business. We have goals. We probably don't do the assessment of the sales and how much money came in daily, but at least we need to do it once a week. So at the end of that week, we are able to see, did I get paid that week, or how many hours I work? I'm working next week. What is my schedule next week? What bills are coming up? What happened this week? What expenses? Is the budget balancing, or what changes I need to make? And then at the end of the month, we are able to see, are we spending more of what we're earning? Then we need to make some adjustments. So we are managing a business. We are managing a household, and it's just like a business. So remember, when you start making that goal with savings, you manage a business, you got to pay yourself first. When you have that family meeting and you are getting information from and resources from all of them to make sure everybody is in the same step, you're doing that like a business. When the business owner gets together with the employees or their partners, they want to be on the same step. They want to make sure that everyone is doing their part and everyone is thinking about the goals, the business goals, the household goals. Okay? All right. So think about the emergency savings. We mentioned this. So after you are back on your feet and you still have debt, consider implementing a rapid repayment plan to pay it down. Sometimes these are called snowball or a debt avalanche. You can look at using a debt repayment calculator to pay down debt as quickly as possible with the least expense. We have a couple of these plans in our website, moneymanagement.org. One is the low balance repayment plan, and the other one is the high interest repayment plan. So it doesn't matter what repayment plan, as long as we have that goal to get out of debt, to continue savings and be prepared as we tackle a financial crisis. So we are here, moneymanagement.org, Money Management International. We are here. Remember, we're here to help. So as you work to accomplish your financial goals, we will be here to help you and encourage you in every step. Please take advantage of all the resources that we have available. We have financial books, we have worksheets, we have calculators, we have links to financial information. So just take advantage. Moneymanagement.org. All right, so remember, you really are not alone. When a crisis hits, when unexpected events hit our home and our family, just keep in mind that you're not alone. You are able to reach out to resources, you're able to reach out to your family members, to coworkers, to your church, or nonprofit organizations, United Way, any city or county, state government agency. You're not alone. And remember, you need to put that yourself in the beast mode again, because we're going to tackle, we're going to be prepared, and we're going to get out of that crisis that we may be facing. So just keep in mind that you're not alone. Just to review once again, remember, you're going to analyze your resources, you're going to assess the situation, you're going to create a priority-based spending plan, you're going to work with your creditors, you're going to contact your creditors, you are going to create a plan, because you are going to finish strong, okay? And you're not alone as you tackle any financial crisis. Today's disclaimer, this presentation is designed for educational purposes only and should not be construed as an investment, tax, or legal advice. So if you need investment, tax, or legal assistance, please consult a professional, okay? So once again, as you tackle any unexpected events, remember, this can happen anytime. You have to be prepared. You have to get into that beast mode. Continue to be positive. You're going to look at all the resources. You're going to assess your personal situation. You have to have that family meeting. You have to get everyone involved because you are going to tackle and you're going to come out strong out of any crisis.
Thank you, Beatriz. And we'll be back next week with the next installment and final installment of our Money Mondays, and avoid scams and identity theft. So we'll see you next week.
Thank you. Thank you, everyone. Thank you, Judy. And we'll see you next week.
Okay.
You have a wonderful week. Thank you.
You too.